There's a high chance that you're overpaying your taxes as a prop firm trader. So today we're going to dive deep into a topic that most traders are not talking about: taxes with prop firms. This is going to be the USA edition. So if you are trading in the US and using a US based prop firm, then this video is for you. Whether you've gotten payout this year, not gotten payout this year, profitable, not profitable, with a 9 to 5 job, without a 9 to 5 job, we're going to go over all of the scenarios with taxes. Now, before we jump into all of the details, you watching this video, you agree that I am completely stupid when it comes to taxes because I am not a licensed tax advisor, okay? So all the information that you get from this video, please go and ask your tax advisor or CPA. So let's get to it. Prop firm payouts are not capital gains, okay? They are self-employment income, since you're just paid the split of trading someone else's capital. So if we have a prop firm trader right here, and then we have a freelancer right here, in the eyes of the IRS, in the eyes of taxes, it is equal. So you're going to pay the same taxes and you're going to go through the same kind of tax codes as a freelancer would be, because you are considered self-employed. Now, here is the process, okay? Here's what happens. Now, if you are trading again with US prop firms, Take Profit Trader, Tradeify, Lucid Trading, Top One Futures, and others, these prop firms will send you a 1099 NEC at the end of the year if you have requested $600 or more in payout. Now, something that most people miss are like, hey, KV, I have gotten these payouts, but they are sitting in my Rise account. Okay, I have not withdrew them to my bank. Will I still get taxed on those? The answer is yes. Doesn't matter if those taxes have been withdrawn to your bank or not, as long as you have requested the payout and they have gone to your Rise account or whatever account you're using, then you will be taxed at the end of the year. So the IRS will get a copy of this. So make sure you report it. And it's going to look something like this. Okay, it's going to show the prop firm name here. So let's say Top One Futures. Okay, details. And then this box number 1, will have all of the payouts that you have requested this year. So if it's $10,000, it will show $10,000. And that's all the information that this form will give you, okay? For each prop firm that you've gotten a payout from, you will receive a separate 1099, okay? Now let's get in some of the details, okay? Let's get into the numbers. This 1099 will go on your personal tax returns under Schedule C, which you will then pay, okay? So what are you actually paying Uncle Sam in this case? Federal income tax, okay? Just like you would do with your W-2, with your 9 to 5. Then you'll also pay state income tax if applicable, meaning that if you are in a state like Florida, Texas, and others that you don't have a state income tax, obviously you're not paying, so that will be 0. Okay, so this is pretty standard to what you pay with your W-2. Now, you will also pay a 15.3% self-employment tax. This is new. If you've never had a 1099, if you've never been a contractor, self-employed, this is going to be new to you. So you will be taxed another 15.3%. So this is an example if you have gotten payouts this year. So let's say you've gotten 30 grand in payouts. Let's say you've had 5 grand in expenses, net profit of 25 grand. This 25 grand will get taxed on the income tax, basically these two things right here, okay? And then also the self-employment tax at 15.3%, no matter which state you're living in, okay? Now, let's talk about these expenses, because I think payouts is pretty standard. You get a payout, then that's it. Expenses. What is this $5,000 here? Well, it could be a lot of things. What is considered an expense? You can deduct any ordinary and necessary expenses, okay? That's the IRS language. Those expenses could be prop firm fees, right? So if you've paid challenges, activation fees, anything of that nature, those prop firm fees count as expenses. Charting platform like TradingView counts as expense, right? Because it's something that you need to conduct this business, right? Indicators, same thing. A trading journal, same thing, right? All of these are tools which allow you to actually produce this income right here, that payout. Trade copier like TradeSyncer, another tool which you're using to produce these payouts. And then it also gets interesting when it comes to physical things, right? So you can deduct a computer, a monitor, a desk, or anything else that you are using, again, for business purposes, for trading purposes. This is not something that you can do with your W-2, right? Even though you're using a computer, laptop, internet with your W-2, you can't actually deduct these things. So this is a benefit to actually being self-employed, okay? Then you can also deduct home office deductions from rent or mortgage. So basically, let's say you're paying $2,000 in rent, and let's say based on the square footage, right, that you measure, hey, I have a home office based on the square footage here, this I'm paying $400 out of the 2,000. So this $400 actually becomes tax deductible, right? Because it's an office space. It's somewhere where you conduct business and that's it, right? You're not sleeping in this office space. Could also be education, courses, newsletters, right? So Discord memberships, mentorships that you're paying out there, books, newsletters that you've subscribed to, anything that has to do with you, again, getting this payout right here, getting that income. And then lastly, could also be trading events like this. And I'm actually speaking alongside Brian Shannon in Tampa, Florida, May 14th and May 15th. Okay, it's going to be a super large trading event, 2-day event, live trading in the morning, guest speakers, keynote speakers like Brian. There's going to be a lot happening. And this could be an expense as well, which you can write off, right? So this is a couple of ways which people are writing off their payouts, their income throughout the year, right? So if you are not utilizing this, then you're definitely overpaying your taxes, right? And events such as this with Brian, Austin, and the other guys are great learning events because, again, they are furthering your education for you to increase that income, right? And it's not just a ticket to the event, which you can get by going to this link right here, but also the flight, the hotel, everything that's related to that because it will be considered a business trip. Now, let's go over a few examples, okay? We're going to go over 3 examples. The first example right here on our left is an example if you have gotten at least one payout. So let's say you've gotten at least one payout this year, right? So in total, you've made about 30 grand in payouts. You've had $5,000 worth of expenses related to these right here, right? So any one of these expenses, right? You've had about 5 grand in total. So your net profit is going to be 25 grand. Now, on this 25 grand, you're going to pay the net income tax. And then on that same 25 grand, you're going to pay the self-employment tax. Now, example number 2, you have gotten at least one payout this year as well, but let's say you are on a net loss that year. So you've had 30 grand in payouts, but you've also spent 40 grand in expenses, okay? Maybe you've just been blowing combines left and right and you have so many expenses that you are not profitable for the year. You're actually at a net loss of 10 grand. No taxes, right? You're not going to pay taxes on something that didn't produce any income, right? So on a net income, there's no profit, there's no gain. But you might be able to reduce income from other sources, okay? Which is something that we're going to talk about in this video as well, right? If you have other businesses or have a 9 to 5, how can this negative 10 grand this year help you deduct taxes from those other sources of income, okay? And example number 3 is you do not get a payout this year. So payout is 0. You've spent 5 grand, okay, whether that's prop firm fees, courses, challenges, right? Anything of that nature. So you're at a net loss of 5 grand. In this example, again, you pay no taxes because there's nothing to pay, right? Now, this is something that usually I tell people you cannot use this net loss to deduct taxes from other income sources, right? And that's why here in this example, I said, you might be able to reduce income from other sources. And I put these stars here. And the reason for that is it's a gray area. And that's why it's very crucial for situations like this to consult with your tax advisor. Because here's the thing. If you have not gotten any payouts this year and all you've had is losses, is it really considered a business, right? Most businesses are in these scenarios, right? So for example, let's say you start a brick and mortar business, right? And then that first year, you haven't opened the store yet, but you've had a lot of expenses, right? You've purchased equipment, furniture, all of that stuff, right? And you haven't opened the store. So on that year, all you've had is expenses. So technically, yes, that's a business. But when it comes to prop firm and trading, right, you really have to prove to the IRS that this is not just a hobby. Okay, you're actually putting in the time and the effort and you're consistent with it for it to be considered a business. If you can prove that to the IRS, then absolutely yes. On this example number 3, this net loss can actually reduce income from other sources as well because this is a business on its own, right? But you have to be really, really good at keeping track of, hey, how much time are you spending trading? How much time you're spending to learn all of this, right? Again, you have to prove to the IRS that this is not a hobby. So example number 3 is a little bit of a gray area here, and that's why I have the stars there. But yes, technically, even if you just had losses this year, even if you don't have an LLC set up, even though you're not going to get a 1099 at the end of the year because there's no profit, you can still put this on your personal taxes as long as you can prove to the IRS that this is not just a hobby. Okay. Now, will I pay less taxes if I trade under an LLC? This is a question that I get a lot. The answer is no. Okay. Whether you just put a 1099 on your personal taxes, okay, and you filed it that way through a Schedule C, or you open an LLC to do that, you're paying the same amount of taxes. The only thing different with the LLC, right? It's liability protection, okay? And then maybe if you want to open a checking account, business account, so you have all of those expenses and payouts going through all those accounts, just so it's a little bit more organized. That's what it helps. But if you think you're going to pay less in taxes, the answer is no. But KV, is there another way for me to save on my taxes? Yes, there is another way. It's a little bit more complicated way, but I want you guys to know this because personally, when I discovered this, it was a little bit late, and I was overpaying a lot in taxes. You elect what's called an S-Corp. So you need an LLC to do this, okay? You can't just elect an S-Corp out of nowhere. So you need an LLC first. And then when you file taxes, you file taxes as an S-Corp. And it's mind-blowing, okay? So here's how it works. Now, before we get into the examples, this only becomes worth it once your yearly net profit, again, not your payouts overall, but your net profit, okay? Again, payouts minus expenses, that's your net profit, hits the 50 to 80 grand range, okay? So if you've made 50 grand in profits this year, right, after expenses, you can start looking into this, ideally in the 80 grand range, even better, right? But if you've passed 80 grand a year, then you should definitely be looking into S-Corp, right? Because you are overpaying in taxes, and you'll see here in just a minute. Now, a couple of things to know about electing as an S-Corp. Part of your income becomes a reasonable salary. And this is something else that you got to consult with your tax advisor because you have to come up with this reasonable salary. You can't just all of a sudden be, hey, I'm going to pay this much to myself. No, you have to come up by doing comparisons, by looking at what other people in your field are getting paid and so on. But you pay yourself a reasonable salary, something that you cannot do on your LLC because everything on the LLC is distributions. But here, you pay yourself a reasonable salary, and then the rest is distributions. And you're going to see on the examples, if this is confusing, you're going to see in the examples how that works. Now, the good thing about this is only the salary is hit with a self-employment tax. You know the 15.3% employment tax, self-employment tax? Only this reasonable salary is going to pay that. The distributions will not pay that 15.3%, and that's where the tax savings come from. So you'll see here on the examples how that looks. Okay, so on the left here, we have example number one. If you are just getting paid a 1099 or have an LLC, either or, they're the same, as I said, when it comes to taxes. And then example number two on the right is if you elect an S-Corp. Now, let's say you've gotten payouts of 100 grand this year, and you've had 20 grand in expenses with a net profit of 80 grand. Simple, right? Same thing on the S-Corp, right? We want to keep the numbers the same so you can see the difference. Now, S-Corp right here, you pay yourself a reasonable salary of 30 grand per year, okay? And then the difference from that 80 grand is distributions. 50 grand, what's left is distributions. And then 1099 LLC, that doesn't exist, right? Because everything is a distribution. Now, self-employment tax, as I said earlier, only gets taxed on the reasonable salary. So 30 grand times 15.3%, you get this $45.90, right? About $4,600 in self-employment tax. If we go here on the left, you're paying self-employment tax on the full 80 grand. So it's 80 grand times 15.3%. That's $12,000 in taxes. Almost 3 times. Again, almost 3 times for that same payout and for that same income. Are you guys with me? Now, there's no self-employment tax on the 50,000 distributions, okay? There's no self-employment tax here. And this is where most people stop because everything else is kind of similar, but I want you guys to see what happens on those other taxes, right? The federal and the state taxes. So federal income taxes on an 80 grand, if you are in a 22% tax bracket, it's about 17 grand. Now, if you just multiply these numbers together, you will not get that because the calculations are a little bit more difficult. But this is just a rough estimate. If you are in a 22% tax bracket, which is just an average, then this is how much you're paying with an S-Corp. And then with an LLC, it's a little bit lower, about $1,000 lower, but similar. That's why most people don't talk about the second part because the federal income taxes, state taxes are very similar from an LLC to an S-Corp. The big savings are on the self-employment tax there. And just by this example, you saved yourself about $7,000 right there. I mean, honestly, would an extra $7,000 a year help you? Help you and your family? I would say so, right? Help you and your business, help you and you growing your payouts, whether using it for more education, whether using it to buy more accounts, right? With an extra $7,000 in your pocket without having to do anything extra, right? Getting the same amount of payouts, having the same net income. Would that extra $7,000 help you? I would say so. Now, let's talk about how does this affect someone with a 9 to 5 with a W-2 job, right? At the end of the year, if you have a 9 to 5, if you're in the US, you're getting a W-2 at the end of the job. Similar to that 1099 form that I showed you guys earlier, you're probably getting a similar form, a little bit more detailed, but it's a W-2. Now, your trading income is taxed at whatever tax bracket your W-2 pushes you into, okay? So whatever tax amount you're paying weekly or biweekly to your 9 to 5, usually that's the same amount of taxes that you're paying on the net income as well for trading. But self-employment tax always stays the same at 15.3%, no matter what, no matter if you're making $1 or $1,000,000, okay? Now, here's the examples on the W-2 and trading as well. Now, example number one, you have gotten at least one payout this year and you are profitable, right? So you've gotten 30,000 in payouts and then you've had expenses of 5,000, leaving you with 25,000 in profit from your trading business. W-2 income, let's say you've made 70,000 this year, right? Now your net income tax is on the full 100,000, okay? So these two together, they're both paying the net income tax. And then the self-employment tax is only on the profits from your trading business, right? You're not paying self-employment tax on your W-2, even though you have another business that's trading, okay? Example number two, you have gotten at least one payout this year, but you are with a net loss on the trading business. So again, you've gotten 30,000 in payouts, 40,000 in expenses. You are down on the year, negative 10,000. Again, let's say you have gotten that W-2 income of 75,000. Look at this now. You only pay net income tax of 65,000. Okay, you're not paying all the taxes from your W-2 either. Now, get it? Most of you guys are paying your taxes on your W-2 weekly or biweekly, whatever your paycheck is, right? But come April 15th or whenever you file your taxes, all of that will get adjusted. So you will get tax back because you have overpaid through the year because you've had losses on your trading business. And obviously, there's no self-employment tax because you are on a net loss on your business. And then example number three, you do not get a payout this year. So payouts 0, expenses 5,000. You are at a net loss of 5,000. 75,000 is your W-2, right? Now, again, going back to the same example that we saw earlier, technically, yes, your net income should be only on 70,000, right? Because this should be deducted, right? But only if you can prove to the IRS that this is actually a business and not a hobby. If you can do that, then this is the case as well. And again, I put the 5 stars again because you should consult with your tax advisor. Now, as you can see, trading through a prop firm is a little bit different than trading with your own capital. There are a few advantages to trading with your own capital, and maybe I make a video about that too, especially trading futures with your own account, with your own personal account. And that's where you have capital gains and some other tax deductions. But if you're trading with prop firms, this is the information that you need. And if you did enjoy this video, hit that like button because I probably saved you a few $1,000s. And maybe you can even share it with your trading buddy and save them a few $1,000s as well.